Just so you know, I'll be recording this session so that you can all have the replay. My name is Elizabeth Bukor, and I am the founder of Wealth from Little, where I am a money coach and I help women and men change the way they think about money so that they can start building wealth. I'm also an FCA regulated financial advisor. And today we are talking about how to protect your biggest asset. And if you've been seeing my emails, you know that I believe that your biggest asset is not your house or your cars or your degree, as amazing as all those things are, because what made those things happen is this: your brain, your thoughts, your actions, right? So you, every single person here right now, you are amazing. You are your biggest asset. You are the biggest wealth producing asset that you have. It's not connections. It's not anything else. It's you. It's who God created you to be. It's everything that He has put inside of you. And so today, I shall be joined by my dear friend, Rashid Bushara, who is a financial mortgage and protection advisor, to talk to us a little bit about financial protection. Before I bring him on, at Wealth from Little, we believe that building wealth can be broken down into 4 main steps. And if you haven't heard me say this before, you can get your pen and paper and make a note of this so you know what step you're on. First is creation. We start creating wealth, right? We create it in our minds, with our ideas. Or maybe you go to work and you create an income for yourself or in your business. The second thing is growth. We grow our wealth. We do that by investing, either investing in the stock market, investing in business, also investing in yourself so that you can keep creating and giving more value to get more income in. The third part is protection. And this is so important because imagine building a house and not protecting it.
I don't want to remember.
Down the road from me right now, is there's one of my neighbors is renovating their house, so they're not there anymore. But the renovators have come in, and the amazing thing is they've boarded up the whole house and the gate, and they've put all this boarding all around the whole house, so we can't even see what they're doing, because they're creating something and they're growing something and they're protecting it. They have expensive equipment in there. I'm sure the builders have expensive equipment in there, and they want to protect that before, imagine if they left the gates open and they didn't protect the house, because the house doesn't actually have a gate. So the builders actually built one to protect it while they're growing it. And then the fourth part is impact, because at the end of the day, what are we doing all this for, right? So creation, growth. Thank you, Baby Salah, for putting that in the chat. 5 points for Baby. Creation, growth, protection, and impact, right? And today we're talking about protection. And I'm going to bring on Rashid now. And everyone should actually put that in the chat, because there's one thing that I always say, and if you haven't heard it before, you're free to use it for yourself. Information without understanding is useless. If you hear this information that we're sharing today and you don't understand it, it's useless to you. It's like more or less a waste of your time. So I want you to write things down. Make sure it gets into your mind, into your subconscious. Make sure you understand what you're hearing. And if you don't, please ask questions. Ask as much as you can, because I am here, Rashid is here, and we're all here to give as much value as we can give. Rashid, are you there? Can you say hi?
Hello. Hi, guys. Good morning, beautiful people. My name is Rashid. Yes. So I'm happy to be in your presence and happy to be joining you.
Thank you. Thank you so much, Rashid, for joining the Wealth from Little community. Tell us a little bit about yourself and how you got into protection.
Yeah, so I'm Rashid. I've been in protection for coming up to 4 years now. How I initially joined the business was I had a friend of mine speak to me about protection and about my personal circumstances. Have I got that covered? This was in 2018, I believe, early 18, and I said, actually, I don't. I've got children. I'm a father of three children, and he came to my house. He reviewed my circumstances, took the right information, and he thought, okay, you need life insurance. And I was like, I don't know, I'm saving money. I don't, do I need it? But at the end of the consultation, I came to that realization, like, oh gosh, you know what, my savings is not going to pay out that instant lump sum, and all the information he gave me made me realize, wow, actually, I am so grateful for this information because I've had previous experience with my mum passing away and not having some of these covers. So him giving me that information made me realize, you know what, I want this, and I don't even know why I even hesitated. So that's how I actually got into it, by buying and subscribing into it. And he offered me a position. He said, "Oh, we actually have opportunities here as well." And I took it with my, I clenched it because I understood the value of it. My why, or why I specifically do what I do, especially with the passion in which I do it, was because when he explained everything to me, and I think one of the things he made me realize was, like, God forbid you passed away tomorrow, what would the reality be to your young children? What, like, just think. And I couldn't not think or remember the fact that I actually lost a mother prior. I lost a mother in 2013 to cancer. And she actually didn't have any form of life insurance or critical illness, so wasn't privy to this information. And it just brought me back to thinking, oh wow, tomorrow is not promised. As young as I thought I am, as healthy and as fit, as gym active as I think I am, like, no one knows what tomorrow holds, because my mom, not in just losing the fact that she couldn't earn because she had cancer, she had to go for chemo, but we actually lost a property that she actually acquired for a mortgage. So there was a lot of things that was lost in the fact that we couldn't maintain the lifestyle, and I couldn't leave him without making sure I had all the relevant covers. So I made sure I topped myself up with a life insurance, critical illness, and income protection. And I really bought and subscribed to it because of my personal circumstance. So that's how I personally got into it. And I say to people, I preach the gospel of protection as people preach the gospel of insurance, because I wholeheartedly know what it means to feel the peace of mind, knowing that if the worst happens, that the way I went through certain calamities or hardship financially when my mom passed, that my legacy or my children will never have to go through that. That's what got me on this journey.
Oh, thank you so much for that, and thank you for so much for sharing that story. And never really heard the whole story before, and for being so open with us. I really appreciate that. So, do you mind if we ask? You said that your mom didn't have, that you lost a property. So, could you
Yeah.
share with us, like, what could have prevented that? What could have prevented
So
the
yeah,
loss of the property? Like, you know.
yeah, because it was later on when I became privy to the information that was out there in terms of products like mortgage insurance that will provide you a lump sum in the event of death, if death occurs throughout the term while you're repaying the loan. Because when you take a mortgage, the word comes from the Latin word, they say till death. It's like it's a loan. The bank actually owns it. You don't own that property, and it's a secured asset where the bank always knows, or the lender knows, that if you miss your payments, they can always come and repossess that property if there's no relevant repayment mechanisms in place if you pass away. So in knowing that now, I would be a fool not to put these things in place. What would have prevented that would be a mortgage protection that will pay out a lump sum, decreasing throughout that term.
Okay.
Even if she had an income protection, for instance, as well, could have potentially helped her. While because she got diagnosed with cancer and she lived probably about a year and a little bit. And in the time where she stopped working and going through chemo, she would have been able to receive an income protection, a monthly income paid to her on a monthly basis, because she was unable to work because of the accident, the sickness. essentially would have provided and eased that financial burden while she was still alive.
Yeah. Okay. So you've mentioned two different things right now. And if we could just break it down so that we understand what they are. So one is, you said mortgage protection that would protect the house. And the other you said was income protection. So while
Income
she
protection.
was, and how many children did your mother have? Was she
There was
taking
four
care
of us.
4? So she was taking care of
Yeah.
4. And what position are you, Rashid, in the family?
I was the third,
You're the third.
oldest boy. So
Oh.
yeah, I had two older sisters, but they'd married and they're kind of they were out of the home at the time. So it was just literally me and my younger brother
And you,
at the
all
time.
right. So you were the man of the house. And so you said income protection, right? And could you share with us what exactly is income protection? Because we are all creating wealth. We all are looking to increase our income streams, right? So how do we protect our income?
Yeah, there's a product that we offer called an income protection that will provide you a monthly income in effect that if you're unable to work due to an accident, sickness, illness, this could be stress, it could be depression, it could be an injury, anything that incapacitates you and you're unable to work or provide your normal day-to-day service, you're unable to do your normal day-to-day activities due to whatever that sickness is, as long as you got some form of a sick note from your GP as evidence or from a medical professional, you'll be able to receive a monthly income till you're fit and able to go back to work. And this could protect you up to retirement age. So the worst happens, you become disabled, unable to ever work again. You would actually receive a monthly income to retirement age because you insured yourself.
Right. Okay. So Rashid, just let me get this straight. So if I have income protection and I fall sick, then it'll pay out. But how about if I don't have a sickness, like a terminal sickness? How about if I have COVID and I can't walk and it's long COVID?
Yeah, it's anything at all that incapacitates you. So we do it based on your deferred period. So for instance, if your employer pays you a 4-week sick pay, you will receive that income for that 4 weeks, and then we'll set that the income will start kicking in from 4 weeks to replace that loss of earnings. It could be 6 weeks. But if you're unable to work and your employer stops paying you after 4 weeks and you've got long COVID, you've got evidence from your GP because you've got the symptoms, it doesn't matter how minuscule or how small, how big it is. It doesn't have to be a serious illness or terminal. It could be back injury. It could be stress. It could be anything at all that
Mental
you can
health?
get sick. No, mental health. As long as you don't have the capacity to work, stress, as long as your GP signs you off work. You know, when you're working and you want to give your employer like a sick note to prove that you're sick, and they request that from work, the same thing you provide to the insurance company, the claims department, and they'll start paying you from your deferred period. If you're self-employed, with options for 1 day from the second day. So, you know, some tradesmen work on a daily basis. They will be gravely affected if in a day they can't work. They could lose out maybe on hundreds of pounds, depending on the level of the contracts, the type of work they do. So we can do a daily deferred period, a week deferred, a month, 6. Some NHS staff might get protection for 6 months because of the contract with the NHS. But you might feel like you want a longer security, and you can do from when your employer would stop, you can now extend your sick pay. So you can look at it as an extension of a sick pay benefit till retirement age.
So income protection is more of is like an extension of a sick pay, but it can be any
sick
sickness.
Pay, yeah.
But you need a doctor's note.
It can be any sickness, yeah. Yeah, you need some evidence once you make a claim. And the evidence is just phoning a GP and just explaining to them your situation, scenario, sickness, or whatever, and they'll give it to you. It's easy to get sick now. That's one of the easiest things.
And if someone experiences like back pain, like we have, maybe someone here is a builder or someone walks on their feet, they're a caterer, they're always standing up, or maybe they are a hairdresser, so they're on their feet all the time and they have serious back pain, and they can't really do their work properly. And they get this income, they have, signed up to have income protection, this extended sick pay per se. How would they claim? Like, would they have to go through that on their own, or what would happen? Like,
we as advisors, we're intermediaries. We represent the client in the middle and the provider. So we liaise with the client, and the client will just say, "Oh, okay, contact the claims department," and they would ask you a series of questions to explain what the sickness or illness is, and then they would require you to email evidence. Upon evidence, then they'll start issuing out the income on a monthly basis. So we'll help with that. The advisors will help with that. So
right. So you would also help with that. You would help your clients do that.
Yeah, I helped. In 2020 was the biggest period in where I assisted most of my clients. A lot of my clients claimed on the COVID-19 and long COVID as well. I've still got a client who's been claiming over, I'm sure it's over 18 months. Wow. Just because there's the evidence of long COVID, and it's not even that she can't potentially even work, but the mere fact that she has discomfort and she's been signed off work, why rush back to work, and why not relax and let your body fully recover? So she's paid to ensure that if the worst happens or discomfort, she can protect her lifestyle, maintain it, and she's just enjoying herself and recovering naturally rather than going back to work with discomfort or with slight pains. Mm-hmm. And that's the comfort of securing yourself, because what we find in our communities especially is because we don't have any sick pays or any income when we're sick, for whether it's locum, bank staff, self-employed, or even if you've got limited sick pay, you might have a bit of backache or back injury. You take a week off, but you're not fully recovered. But yet you're a carer, but you're lifting people, you're injuring yourself even more because you haven't fully recovered. But you're thinking of the bills you have to pay, the food you have to put on the table. So what income protection will enable you to do is literally take the time off that you need to relax, to rest, recover naturally, and then once you're fully, competent and to go back to work, that you get a letter from the GP that writes you off like, okay, right, you're fit now, you can go back to work. Can you go back in your own time?
Yeah. So I just pause there. You have a client who has been claiming her income for 18 months.
Yeah.
For long COVID.
Yeah.
She's not been back to work.
She's not been back to work.
And that, because she's got that income coming in, she's able to keep up her lifestyle, keep paying her bills, because it's the same income she would have been getting if she was at work.
Yeah.
Just that now.
With the income protection, we can protect up to 85% of your gross income, up to 65% of your net income. So they don't protect everything. But what I usually advise my client is to protect the portion of their outgoing. So the core expenses. So things like whether it's a rent or mortgage, council tax, utility, all the core expenses that they have on a monthly basis that they need to sustain themselves with is what I recommend they protect. So their lifestyle can be maintained.
Right. Okay. So like if someone earns $5,000 a month, but their rent, their mortgage, their bills, all their essential bills comes to like $3,000 a month, then you recommend they protect up to $3,000 a month.
$3,000 a month.
So that at least all those things are still amazing. Great. Okay, Rishi, we've got a question here. Is there some financial requirement or commitment one has to make before claiming / accessing income protection?
No, with income protection is quite easy. The qualifying criteria is that you have to work over 16 hours a week. And if you're self-employed, it's very hard you don't have like a structure or contract. So that's, you can just say you work whatever hours. It's only when you're employed that on your contract it has to be over 16 hours, and that's all it is. And as long as you have an income, whether it's based, if they needed proof of it, you have pay slips to prove that you actually earn, those are the requirement. You have to have evidence of employment. Otherwise, you're protecting income. So you have to have evidence that you actually work and you work over 16 hours. And those are the only qualifying categories that will enable you to get it. If you don't qualify, if you don't work 16 hours, you can't protect it. If you're unemployed, you obviously can't get income protection.
Okay.
And that's it, really.
Mm-hmm. I hope that answers your question, baby. Okay, so income protection is like an extended sick pay. It protects your lifestyle. It allows you to ensure that, you know, even if you are unwell, you don't have to be seriously ill. You just have to be, even if it's, you know, COVID or you're, not that, you know, COVID is serious, but even if it's you know, you twisted your ankle, you hurt your back, something that is, you know, incapacitating you, you can take time out to actually heal your body, heal yourself, heal your biggest asset, right? Which is yourself. Okay, then you mentioned something else when you spoke about your mom. You said that she was unwell and she didn't have critical illness protection. So is that like health insurance? Or
no.
Tell us about critical illness.
Yeah, so I've mentioned income protection, which is a monthly income that protects your lifestyle.
Yeah, and everyone write that in the chat. Income protection is a monthly income that protects your lifestyle, so that you remember it, so that someone else sees it and remembers it. Let's help each other. Someone put that in the chat. Income protection is a monthly income that protects your lifestyle. So for those who want to protect their lifestyle, right?
And then I also touched on a mortgage protection. So if you have a mortgage, which is a large liability, because you don't own the asset and you might want to leave that to whether it's a spouse, your children, or partner, it will be recommended to get a mortgage protection that if anything happens while you're still paying off that mortgage, whether it's a 20-year term that you have with the lender or 30, 20, whatever, you do a protection that if death occurs in that term, they'll pay out that lump sum. So that liability is totally paid off and you can actually pass that on. Even if it's a joint mortgage with a partner, you don't want to leave your partner with the responsibility of that liability by yourself when they assessed your calculation of the mortgage was both of your incomes. So now you're gone, your wife is going to be left just paying that by herself. It will be selfish of you to do that. Put a mortgage protection to ensure that if you're not here, at least that property is paid off and your family can inherit the property debt free. So income protection, mortgage protection, and now we're going on to critical illness.
1 second. 1 second. Before you move on, you just said something really big. Yeah. You said that we should at least protect our mortgage if you do have a mortgage. And anyone in this, anyone in the chat, if you've got a mortgage, just virtually raise your hand up. You don't have to type it, or you can type it in the chat. If you have a mortgage or you are intending on buying a house with a mortgage. So let me know. If you have a mortgage, yeah, okay, I'm seeing hands going up. Or you're intending on buying a house with a mortgage. Mortgage protection is a form of life insurance, right? That protects your mortgage, because if, God forbid, right, a partner, you see, you buy a house with a partner, you have children, you're all living in this house. What Rashid is saying is that if, God forbid, one person passes away, then the liability of the house falls on either the children, if that's the main bread, if it's a single parent income household, or the partner. Now, the banks want their money back. Ultimately, if somebody is sick and cannot walk, they may tell you, oh, sorry, for 3 months, maybe they'll, postpone your payments and increase the interest. But they want their money back. They are in a money-making business. And so that's why we have to protect these things, right? Because if you have a home, you have property, you have rental property, and you want to keep that property, that home, that asset, that wealth you're building through assets in your family. You want to pass it down to someone else. You want to pass it on to a spouse. You want to pass it on to a child. You want to protect it from, God forbid, in this situation, death.
Repossession.
And repossession. From the banks. No, we're building wealth. We don't want to go up, get a mortgage and then go back down and lose the house because of lack of an income, because you couldn't work, or lack of an income because your dependents couldn't raise the money to pay the mortgage when you were gone. This is really important. This is one way that we can protect our wealth and protect the assets that we're building. And it's so important. We talk a lot in money management. We talk a lot about building emergency funds because we don't want to go back into debt, right? And this is one way we're building emergency asset funds per se, because God forbid, we don't want emergencies to come up. But should they come up, you've just spent a few pounds a month, a few pounds a day, a few pence an hour to protect your whole family from and pay off your mortgage. So with mortgage protection, you would, the insurer, should anyone, whoever is insured pass away, will pay out a huge lump sum based on what you've asked for that should be able to clear off the mortgage. And imagine that, your children starting life with no debt. They are not stressing. God forbid, they've lost a loved one, but they are not going to add that financial stress upon the emotional stress of losing a loved one. They can stay in their own home. Okay, thank you for sharing that with us, Rashid.
Yeah. I think you made a very, very valid point and even emphasized it, because if you was to lose a loved one, the last thing you want to be thinking, if you're not in that financial situation where you budgeted of actually now taking over a mortgage, that's the last thing you're thinking of, and that is additional stress, and that could easily be alleviated by just whoever has the mortgage putting it in place. Because people don't think, they think, okay, yeah, I have my wife, but if you left a wife or a husband, that burden that you're leaving is even more than what you would think it is in reality. Because I went through it. You might think in hindsight, oh yeah, now I'll be all right. They'll be all right. They earn this amount. But when a two-income family is now gone to one, that dynamic changes very drastically. You had two breadwinners coming in, or two joint income coming in to stabilize a home. There's a lot of changes that happens, and after losing a loved one, that is not where you want to start. Now your lifestyle changing so much where you're having to compromise and sacrifice so much. In our case, we actually lost the property because we couldn't maintain it. There was a lot going on other than just the financial stability, so it was just too much debt. And and that's the worst thing you can leave to your family. Now where I am in a position where I am, I can't stress but emphasize the importance of it, because the lack of it is selfish. I'll put it with, if especially if you've got the information now, or you've got the knowledge or the awareness or the resources now, it would be selfish not to protect those assets and leave liabilities, or potentially leave your family in a financial struggle, because no one knows what tomorrow holds. So you really have to protect your assets, whether it's yourself and your actual assets in terms of property or whatever you see value to, wherever there's value.
Yeah, and if your family as well, that's an asset as well, isn't it? Your family.
Yeah.
And may I ask, Rashid, what happened after you lost the property? After you had no mortgage protection, you had no life insurance, and she was sick, and then she passed away, and then you lost.
Yeah, we inherited the property and we really couldn't maintain the monthly overheads. We even tried to get tenants and rent it out. In the whole process, there was debt and liability that we couldn't necessarily maintain, because while she was alive, She wasn't working. There was a lot of debt that was accumulated even before she passed that. It just had to go. So we ended up just going and privately renting it because that's what we could afford. We actually lost all the hard work and all the payments that our mom had made for all these years
Mm.
because that wasn't there. So that's what happened essentially, that we actually lost the home that
Yeah,
we had.
that must have been hard because you
Yeah,
just
definitely.
lost a parent, you lost the effort that she had put in, and then
Yeah,
you lost the asset, you lost the home as well.
yeah,
Thank you for
yeah,
sharing that with us. Um, you were going on to explain, sorry,
yeah,
you're going on to
yeah.
explain critical illness.
Critical illness. Yeah,
Tell us, what is critical illness and how does that differ from private medical insurance? Like, is it the
yeah.
same thing?
So what critical illness cover essentially is a product that will provide a lump sum in the event of a diagnosis of serious critical illnesses like the cancers, the stroke, the heart disease, internal organ failure, the multiple sclerosis, kidney failures, like third-degree burns, those more serious illnesses that really cause like some huge financial impact in your livelihood. It pays out a lump sum. With a mortgage protection, you can add that to the mortgage protection because if you're paying for a mortgage, it's not just a death you're protecting against. Can you imagine you have a family, you're the breadwinner, and you suffered a critical illness like my mom did? You can add that to the mortgage protection as well for
Mm.
additional cover where if you was to have suffered like a cancer or critical illness and you're unable to work or pay off the mortgage, that lump sum will pay off that mortgage for you. So you have that security that the mortgage is fully gone. Or you can have a standalone critical illness where you just have it just in case, God forbid the worst happens as well, whether you have a liability or not. At least you can have a lump sum to pay off even small liabilities, whether it's car finance you have that you just want to pay off, or other bills, or even with that lump sum have the financial options for medical treatment, or even if it is like you suffered a serious illness and your mobility was an issue, a lump sum received can alter your home to invest in a chairlift or a lift if it's appropriate in your home, or just gives you the financial freedom really to seek treatment in different countries or whatever it is. It gives you that lump sum that helps you cope, that you can take even if it's a year off or whatever and just pay off debt, pay off whatever you need to pay off.
Mm.
And it's different. You asked if what the
Yeah.
difference was. So that's a critical illness cover that will pay off a lump sum. Sometimes people add it to obviously the mortgage to pay off the liability in case of a serious illness, or just have a critical illness just in the case of anything happen, they have the financial freedom or choice to do what they want with it. Even if it's take time off work and go on holiday, it's a lump sum. That's essentially what it is. With the private medical insurance, it's different in the sense that it doesn't pay out any cash, but it pays towards your treatment. So why you buy a private health insurance is because, as you know, the NHS is very strained, especially due to COVID. The waiting list is now even almost doubled because there's a lot of strain on the NHS. And what private health insurance would get you is quick access to treatment. So it will pay for the treatment, get you quick access to diagnosis, prognosis. While people are waiting on the NHS for 3 months for a scan, MRI scan, or tests or blood tests, and waiting a month for results, or to see a consultant 3 months later after doing a test. With private health insurance, you get that instantly. You get access to 24-hour GPs where you can call a GP. You get prescriptions instantly. It's just giving you quick access and giving you access to the best medical treatment, best private hospitals, and medication that isn't available in the NHS because you're paying for it privately.
Mm. Yeah. So thank you for sharing that. And so just to demarcate, to differentiate, critical illness cover gives you a lump sum once you've been diagnosed. Once it's been identified that you
Yeah,
have a particular illness, right?
illness. Yeah,
And then you get this lump sum. And how much can this lump sum be? Is it based on the illness, or can we decide how much we get?
You decide on how much it is that you want. If obviously if you're attaching it to a mortgage, it will be based on, if you had a 300k mortgage, for instance, to be based on that, to cover that in case that happens. So you don't have to worry about it. If it's, we as advisors, we might recommend you protect about maybe 2 years of your earnings on a critical illness. So if you earn maybe 50k a year, we might say, okay, recommend you provide a a lump sum of 100,000, at least probably 2 years worth of your earnings if the worst was to happen.
Okay, yeah. So that gives you a lump sum. So should any illness happen, something with your heart, something with any of your organs, a burn, something like that should happen, you can, it'll pay out this huge, let's say 100k if that's what you want, or if you wanted 200k, it'll pay out, or if you wanted just 10k, it'll pay out this amount to you in advance. And then you decide how you want to use that money. Maybe you want to use it to supplement your income. Maybe you want to use it to rearrange your house. You want to use it to seek healthcare services somewhere else, right?
Yeah. It just gives you the option, the financial freedom.
Exactly, right? Gives you the option. Whereas private medical insurance or private health insurance is not a lump sum, but it gives you instant access to healthcare.
Yeah.
So you don't have to,
hospitals.
Yeah.
Yeah.
So you don't have to wait on the NHS if you are in the UK. It gives you, now with private medical insurance, is it only restricted to access to the healthcare in the UK?
Yeah. It is UK. The contracts of whoever is Bupa, Vitality, Aviva, it is in the UK that you get but it's the best hospitals in central London. Depending on what package you take, to be honest with you, they are, but it's all UK based.
Right. Okay. Great. And so that's really a good understanding. So you can see there are two main ways you can literally protect against a sickness. Either you get the lump sum financial support that reduces stress and allows you to decide where you want the money to go should anything happen like that, or you get access to quick healthcare for yourself, your family, and this one second. And this can be very beneficial if you're unwell and you need quick assistance, quick help, and you don't want to wait 5 months to see a consultant or 3 months for a surgery. You want things done real quickly. Yeah. Okay, so that's understandable. And if you have any questions, please put it in the chat. Do you understand what critical illness cover is? Do you understand what mortgage protection is? And do you understand what private medical health insurance is? Yeah. Rashid, before we move forward, and I want to ask you what the main things that hold people back are. What kind of beliefs hold people back from taking out protection and insurance? I want to ask you, before that question, I want to ask you what you think is the difference, because we hear a lot about life insurance, and today you've talked about mortgage protection. So can you tell us what's the difference, or is it the same thing? What's life insurance? What's mortgage protection? And which one do we need, or which one do we not need?
Well, life insurance essentially is this is what it does. It pays out on death. It would is based on the amount you want to ensure that if you died, your family, loved ones, or partner, whoever could receive that lump sum. And what mortgage insurance is essentially it's a life insurance, but it's designed specifically for the mortgage.
Oh, right.
And it's designed specifically to the term of your mortgage. So if you just bought a house and your lender gave you, your house is £400,000 and they've asked you to pay over the next 25 years. So the mortgage protection will protect that term to the 25 years, for instance, and the amount of the mortgage. But because depending on the level of your mortgage, if you have a repayment mortgage vehicle where you pay off monthly till the end of that term and the amount is finished, that's called a repayment mortgage. So the product will be decreasing. So the amount of cover will decrease in line with how you make your monthly repayments. So by the end of the 25 years, there will be no money left. So let's say, for instance, it's a 20-year term, and the mortgage is 400,000. In 10 years, the amount of cover will decrease to 200,000 because you only have half, and you would have been paying half of it. So it literally works decreasing in line with your repayment. So it's very different to life insurance that will be leveled. If it was a buy-to-let property, maybe an investment property that you're not intending to repay back, but it's an interest only, then you do a level term to protect that. If in case anything happens, at least you can buy out that property. So the mortgage will be leveled. The term of that would always remain. The amount will always remain to the end of that term. But with a life insurance is different. You can protect yourself to potentially your retirement age, because if you die throughout the years of your working life, you want to replace that earning that you was bringing in until you start maybe receiving pension, whether it's 68 or 50 or 65. You would do a life insurance potentially till when you know you're not going to be earning no more, and that life insurance essentially is there to replace the earnings that you would have been bringing in, to replace that to those who would be affected, whether it's your family or partner. So that's a very different thing in terms of life insurance is just serving a replacement of your earnings, for example, and the mortgage protection works specifically to the type of mortgage you have, whether it's decreasing or level. The package will be covering how that mortgage is being created for you.
Yeah. Okay, so that's great. And so for everyone here who has a mortgage or is intending on having a mortgage, do you know what type of protection that you have, if you have any protection? And is it protecting, is it suitable? It's something that we have to ask, is it suitable, right? So that's something that you have to check for yourself. But Rashid, thank you for explaining that. And now I want to ask, what, in your experience, what do you see holds people back from getting any form of protection or insurance? For me, I know that one thing that I used to think, although I do have protection, but one thing I used to think was, I'm young, I can do it later. I don't need to spend money on that right now. What do you say to that?
Yeah. Do you know what? I had the same thought process as well when the insurance advisor came to me, and I was like, you know what? I'm young. I'm like this, like for old people, and I'm healthy. I go to the gym about 3 days, and it's that thought of not feeling invincible, but I can't see it for myself. But who can? One thing that death is it's promise, and that's one of that misconception that, oh, I'm healthy, I'm young, I go gym. Death death can come. No one knows what tomorrow holds, and death can come to anybody. It can come as a thief in the night, and it, so that's a misconception that you're almost invincible, whether it's your age or how fit or healthy you are. Maybe another thing that holds people back is the misconception of maybe insurance don't pay, or they've heard stories of someone paying monthly, and then when it comes to paying out, the insurance company didn't pay. One thing I would say about that is that we live in a Western world, in the United Kingdom, and it's very regulated. These institutions are regulated heavily. We're regulated by the Financial Conduct Authority, and these companies are the same institution that regulate your bank. You can't put money in your bank and you not get it back because the bank goes bust. The banks themselves have insurance where the financial service compensation scheme covers your money up to £85,000 of what is in the bank. So even if they go bust, the government covers it. So the insurance companies themselves are regulated by the same body and also covered by the same financial service compensation scheme. So they themselves have that protection from the government that you guarantee get your money. The reason why I said that is they would have to pay that money as long as the the product has been done right, it's done accurately, you've answered all the questions accurately and truthfully. There are two reasons why insurance companies don't pay out. By law, they have to pay out, and you can even go to the financial ombudsman service if you're disputing a claim. There's two reasons why insurance company won't pay you. If you commit suicide in the first 12 months of that claim, there's a clause in there in the terms and conditions that they won't pay out that amount of money. They won't pay out because you've committed suicide within 12 months. After 12 months of having a life insurance policy and you commit suicide, they can still pay. They will pay you. You can literally take out life insurance, 12 months later commit suicide, and God forbid, but I'm just saying they will
No
pay
one's
out
committing
by law.
suicide.
No one committing suicide
They're living long.
by the grace of God will live in long. But the second reason why they don't pay out is because of non-disclosures. So the way insurance companies work is they assess risk. So they'll see it's all banded by whether you're a smoker, it's all banded by your health, your lifestyle, your age, and these are certain criteria that they factor in. So the younger you are, the more cheaper the cover would be because they deem you to be less likely to suffer serious illnesses or less likely to die. The older you get, the more expensive it would be. Also, as a smoker, they might increase the premium because you're deemed as a higher risk. And females get slightly less. They pay slightly less, shall I say, sorry, because they deemed as they're potentially going to live longer. So there's certain factors that how they create the price, and health is a factor as well. So you can have someone the same age, and let's say, for instance, they have a higher BMI, higher weight to height ratio. They might have to pay slightly more because them being slightly overweight poses as a slightly higher risk. So these factors are always taken in consideration. If someone has health conditions, like let's say they've had a stroke in the past, cancer in the past, or a serious illness or condition that could affect the price and it wasn't stated consciously, it could be deemed as fraud because if the insurance knew you had, let's say, a kidney that was defected or a injury years ago, they could have made four decisions: either declined your policy, postponed your policy, increased the premium, or excluded that pre-existing condition. Say, okay, we'll pay you out for everything except this pre-existing condition because it poses too much of a high risk. And then they'll offer you the term, and it's up to you for you to take it. But if you never disclose certain health conditions that could have been instrumental in them pricing you an accurate price for yourself, and then years later you've had cancer and then you died, you committed fraud because you wasn't accurate with the information when they asked you. Because on the application, they asked you, have you ever had this, have you ever had that? So non-disclosing important information can lead into either a non-payment, make the payment void, or they might reduce the amount. So that's what people sometimes say, oh, they don't pay, but there has to be a reason. We're in a country where everything is done by law. So that will be the only reasons why they don't pay, if accurate information wasn't inputted. But as advisors like ourselves, we make sure we go through that and emphasize the importance of being honest and truthful, because all the insurance company need to do at the point of claim is go through your GP records and assess, oh, the information you gave at the time of application and what they've seen is different. And that could be what could make your claim invalid. Just think about this. It works the same way as car insurance. Can you imagine you have a car and you crashed your car yesterday? They wouldn't pay for a crash that you had prior you taking the insurance, and then you took insurance today, for instance. You had a crash last week. You want to make a claim. If they find out that that crash was done pre issuing you that policy of car insurance, they're not going to pay because it was pre-existing accident. They only pay from the point of covering you. And if you lied about it and they found out, your claim will be void.
Yeah.
Same as Life insurance.
So the main reason why an insurance company wouldn't pay out a claim would be if you lied on your application form. So it's very important to tell the truth. And when you do tell the truth, it doesn't mean that you're not going to receive it, right? You will still get the cover, but at least they would know that this is your actual real life situation. This is your health situation. This is your. And then another thing that you said was that that the younger you are, the cheaper the insurance is. And because I love math so much and I can't find the calculation right now, but I'll tell you, like, if you do sign up for insurance in your 30s, your 40s, the amount you pay till retirement, let's say retirement is 70, is much cheaper than if you sign up for insurance when you're 60 and you want to pay for the next, you say, oh, I'll wait till I'm 60, I'll pay for insurance then, and it'll cover me for the next 10 years. For example, your total premium from 30 to or 40 till 70 could be like £3,000, where, I mean, in total, so like maybe £10 a month each month for 30 years could come in total, so £3,000 maybe. But if you sign up when you're 60, your total premium for those 10 years, because you're posed as a higher risk, could be like £4,000, even though it's just 10 years. So signing up earlier is always more beneficial. One, because you pose as a lower risk, you probably have little health issues, and then you get a much cheaper premium, and the premium doesn't change, right? Rishi, does the premium change as you get older?
No, once you've secured something when you're young, or the younger that you can do it, that's the best thing for it. It stays guaranteed as long as you click a guaranteed option. There's reviewable ones, but those ones are not advisable because in 10 years they might be reviewed and it might change, but the guaranteed ones don't. You have that cover. You could end up having 100,000 cover, so to cut you for 100,000 and pay only like £5, £10 because you're young, and you maintain that all the way to, let's say, 90 or whatever age. But if you, as you mentioned, thought of, no, let me save money, what you end up doing is paying more as you get older, and realize all those years that you didn't get cover, you weren't actually protected. The person who done it younger, they've been protected from whether it's 18, 19 or 30, 35, all throughout.
And the cumulative is cheaper. And the cumulative cost that they would have paid is actually cheaper, because if you pay £5 a month when you're in your 30s and it goes all the way to your 60, I'm not just saying that that's the price, I'm just giving out a number. That could come to a total of £2,000. Whereas if you start and then your premium is £100 a month, you pay a lot. You pay
a lot more
even in a short period of time. All right, we're coming up to the hour. Thank you so much. You have shared so much. Guys, please let me know. Drop in the chat the different one and the different types of protection and insurance that we have talked about today, and let me know one thing that you have taken away. You've shared with us so much about income protection. You've shared with us about mortgage protection, about life insurance, about the importance of getting, protecting our lifestyle, if that's something that we are consciously wanting to do, and the importance of also protecting our wealth, protecting our assets, protecting the things that we've been working towards. You're paying off your mortgage, you're working for something, you want to protect that and pass that on to the next generation, which is also very important. And we thank you so much for sharing that. Let me know in the chat if you have any questions.
Yeah, please. If you have any questions, that maybe something I might have said that you might want clarity, please ask it so I can maybe elaborate.
Yeah. And so, Rashid, one thing that I wanted to ask you, what do? People who want to protect, what do financial advisors do? What do rich people do? What do they do to protect themselves and their families? Tell us what they do.
I think the basis of wealth growing is for you to build wealth. The first things first is you protect what you already have. If I believe protection is the foundation, and the wealthy first and foremost protect what they have so they can build. It's like protection is like the foundation, so not to lose what you have, and then you can build on top of that. So they ensure that if an incident happens, that they can still maintain income. If a serious health occurs, they don't lose any assets. So foundation is really based on protection. Everything else is built on top of that, where you protect yourself first before you start thinking of investment and stuff. You protect what you have or what's coming in. One
Mhm.
thing I'll always add and as well is for those who do have insurance, because I can believe that there might be a few people on this platform that have insurance, it's always good to get it reviewed, especially by a specialist. Because some of us might have received this insurance from a bank or gone online or gone post office, but it might not be the most suitable recommendations. It might not have been advised because one thing you find is the banks, they're not specialists in advice. They bank your money and they give you tiny interest in it. They're good at transactions, but in terms of actually advice, we're qualified and trained to make appropriate recommendations, to look at your circumstances, gather the right facts, find and make the tailor that package to suit your circumstances. So it's always good to review your cover because I find on reviewing policies all the time that they don't have adequate cover or they have covers that doesn't necessarily cover their needs or they might it might end prematurely when they actually need it most. So if you do have insurance, please contact Elizabeth so she can actually arrange your cover being reviewed by a specialist.
Mhm.
That's one thing I'll emphasize on.
Yeah, and that's so true. So guys, I'm going to drop a link in the bio, right, in the chat right now. Right. Can everyone see the link? Let me know if you can see it.
Yep, I saw it.
You see it? Okay. Now, everyone right now, if you do have insurance right now, you want to get it reviewed. You want to make sure that it's actually up to standard. It's actually going to protect you. You want my eyes, you want Rashid's eyes on your policy for free. Right now, go onto that link, book a session right now. As I'm talking to you, book it. I'm looking at my calendar and let's put a time in the calendar and then we can discuss what you have, make sure that it's fit for your purpose. If you do not have any form of protection and you do not have any insurance, go onto that link right now and book a session, book some time with me or Rashid if you want to speak to both of us. And let's make sure that you are adequately protected. You are protecting yourself. Income protection protects your lifestyle. So you're going to be fine. You're going to be living maybe you sprained your back, you hurt yourself, you've got COVID, you have, something that's stopping you from working in your business or in your job, right? You want to protect yourself. You want to see what, how much it is to protect yourself right now. And if you're looking to get a mortgage or you already have one, book a call and let's make sure that you are protected in your mortgage, protected, everything with regards to that. And just so click on that right now and let's make sure that you're actually protected and share it with your friends and your family, people that you love, people that you want them to be protected too. Because, there is no point if we are all learning and we're not sharing what we are learning with others around us. You want your families to be protected. God forbid that your sister, your brother, your neighbor should, get sick and can't go to work and therefore lose their income, right? What do they have in place to ensure that they don't go into debt? What do they have in place to ensure that they don't go relying on 20% interest rate credit cards and high interest loans that push them backwards, not forward to building wealth, but backwards, sets them back so that now they're building wealth from a negative position, right? Get protected right now is the message from myself. It's the message from Rashid. This is one of the pillars to building wealth. As we're building, we're protecting, right? We're protecting as we're building. We're growing our wealth, but we're protecting it at the same time. We protect what we have now, and as we build more, we protect that as well, and we ensure that it's passed on to the right places. There's so much more about protection we can talk about, trusts and wills, but I think we'll talk about that in another session. So we'll end it here. If you haven't clicked the link, I don't know what to say to you.
I don't know what you're waiting for.
Yeah, exactly. So click it right now, every single one. I'm checking that you're clicking it. Okay, I love you guys. Thank you all for showing up. Thank you all for learning about this. But please, please, please do not keep this information to yourself. Please share it with your friends, share it with your neighbor. If they need someone to talk to, you can share this link with them. They can talk to us for free. We are not charging a penny. Just share it with, let us all grow as a community, as we're building wealth. Let's not build it in isolation. Let's not protect in isolation. Let's help each other grow. Let's help each other get to the place that we want to be. Let's do this together. If you remember, the word of the year is together. And this March, we are marching together, right? Thank you so much for coming, for being here, Rashida. We really appreciate you, and I appreciate all the value and all the experiences that you've shared with us. We really, really do appreciate that.
Yeah,
thank you to everyone else here who's showing up and who's watching the replay. I really do love you, and I appreciate you too. Victoria is saying thank you. Before we go, and something that we always do is drop one thing that we've learned. That's something that we always do as a community. So if you're new here, just drop one thing that you've learned and you can say bye. Why? Because information without understanding is useless. Okay, thank you. Thank you. Thank you. I really appreciate that. Okay, and so I will stop recording.